Hello guys, once again I am back with my new video, and in this video I am going to explain about what is a LiDAR. What is a LiDAR in insurance? So LiDAR in an insurance policy provision that add benefited to or amends the terms of a basic insurance policy. So LiDAR provide insurance parties with additional coverage option. So or they may even restrict or limit coverage. So there is an additional cut if a party decide to purchase a rider, so must are low in cost because they involve minimum underlighting. So a rider is also lethal to an insurance endorsement, so it can be added to policy that covered life, home, and auto and the rental unit. So if we talk about the takeaways, so a lighter is an insurance with provision, policy provision that added benefit to or amend the policy term of a basic insurance policy to provide additional coverage. So a LiDAR tailor insurance coverage to meet the need of the policyholder. So LiDAR comes to an extra cost on top of the premium and insured party pays. So LiDAR come in various forms, including long-term care, term compensations, waiver of premiums, and exclusionary LiDAR. Though in some cases, a policyholder may not be able to add a LiDAR after the policy has been implemented. So understanding about the LiDAR, so some policyholder have specific needs. Okay, data. Let me explain in this video about data what not covered by the standard insurance policy. So a LiDAR help them create the insurance product that meet those needs. Insurance companies offer supplement insurance rider to customize policies by adding varying type of additional coverage. So the benefit of LiDAR insurance includes increased saving, column, not purchasing a separate policy, and not the option to buy different coverage at a later date. So size and insured person can add terminal illness and add an exclude death benefits LiDAR on a life insurance policy. This LiDAR or provide the insured with a cat benefit while living. The insured may use this fund how they wish, perhaps to improve their quality of life or the policy and for medical and financial expenses. So when the insured insured passes away, they are designated beneficiary receive details that benefits. So the face value less the person which under the escalator that rider benefit. So buying an insulin rider is not up to the insured party who should be wage have the cost against their individual need. So although lighters may sound appealing, they come at a cost on top of the premium for the policy itself. So certain homeowner insurance policies uh, could come with extra earthquake rider, but someone who doesn't live near a fault line probably doesn't need this additional coverage. Another thing to consider, a rider may duplicate coverage, so it's important to look over the basic insurance contract. So before adding a rider to an insurance policy, the holder should weigh the cost of the rider and decide whether they really need it. It is also wise to check that the rider doesn't duplicate coverage already included in the basic policy. So these type of riders come in the Belliard form, including long-term care, term conversation, a waiver of premiums, and exclusionary long-term care rider. So long-term care is the full form of the LTC is long-term care. Coverage is often available as a rider to get cash value insurance products such as Universal, Hall or valuable life insurance. So a rider can address specific long-term care issue the fund reduced by the policy depend their benefit whichever when they are used. So as soon as that beneficiaries receive the death benefit less than amount paid out under the long-term care in rider. So in some cases, the policyholders need may exceed the total benefit of the rider's insurance policy. So it may be more advantageous to coverage a stand-alone LTC policy. So if the LTC rider is unused, the policyholder solves saves in cost when compared to purchasing stand-alone LTC policies. So the term conversion rider, term life insurance provider coverage for a limited time. So it's typically 10 to 30 years. Once the policy expires, the policyholder is not granted new coverage at the same time. The policyholder medical condition may make it difficult or impossible to obtain under policy. Thank you guys for watching my video till the end. Thank you, thank you, thank you, thank you.